Tuesday, March 21st, 2017, Monaco 64, home of alternative economics and contrarian views. So it's 20 to 6 p.m. London time, or 20 to 2 p.m. U.S. East Coast summer time. So today, for the first time since October, the stock market has dropped 1%. Which, having been in the market for over 20 years, is quite amazing that for almost 6 months, we haven't seen a 1% drop in the stock market. So right now, the S&P is down 24 points, so 1% at 2349. The Dow is down 196 points, or just under 1%. Gold and silver have done well today. Gold is trading 1246 right now. The high of the day is 1246.80. The low was earlier today in Europe at 1226. And that's encouraging because usually gold, comes off during US hours. And even if we rally in Europe, we come off. And it's encouraging to see that we've actually rallied into the close of COMEX. Silver is 1755, up 12.5. The dollar is fairly weak. We've dropped back below 100, which is a key support I was talking about a day or two ago. It's at 99.70 right now, down 0.2%. So what's causing the stock market to finally, drop 1%? Well, I've read and a few articles in the last week or so about how U.S. bank credit is the rate of growth of bank credit is actually declining quite sharply. It's still growing, but at a lower rate. And when I read that, I said, well, that's interesting. Banks create all the credit. They provide credit also to the shadow banking system. Banks are at the heart of, this credit-based fiat money economic system we have, especially in the West. There's a saying, live by the sword, die by the sword. And I would say in our credit junkie economies of the West, where borrowing and credit is so important, where manufacturing has taken a back seat, and consumption and government spending is important. If credit contracts, it can be very dangerous for the economy. So just as the saying goes, live by the sword, die by the sword. You could say live by the banks, die by the banks. And am I saying that this is it? We're going to start seeing, a crash in the markets and the economy? I don't know, but it's interesting to keep an eye on it. There's an interesting index to keep an eye on. It's called the KBW Nasdaq Bank Index. And it's an index of the major holding, major banking corporations in the U.S. For example, Bank of America is 8% of this index. Bank of New York, 4%. Citigroup, 8.1%. JP Morgan makes up 8.1% as well. Northern Trust is in there. Who else? Let's see. Well, there's 24 components. Wells Fargo, U.S. Bank Corp. So all the major U.S. banks. And the KBW index, as you can see by the chart here, in 2007 hit a high of 117.9, so almost 118. That was a top of the housing bubble just before things, collapsed, and the U.S. banking financial system almost went bust. And you can see there we dropped very sharply lower. It took 2 years, but we went down all the way to 24.16 in February 2009. We've rallied since then, almost fourfold. We got up to 97 or 96, let's see, 0.22 to be exact, in the beginning of February this year. And now it's starting to, looks like it's starting to keel over a little bit. But it's early days. We need to keep an eye on this index. Today, as I speak here, this KBW, the ticker is BKX, by the way. That index is down 3.6%. So that's a pretty big move down, and interesting to keep an eye on, the U.S. banking sector. And it's interesting. It just goes to show, that sometimes you get things come out of left field. There's been a lot of talk about China is going to cause the next, correction or the next crash. Deutsche Bank, and I've said it too. I've kept an eye on Deutsche Bank. North Korea, the debt ceiling. But here we are, and we're starting to see, some cracks in the U.S. banking system. I'm not saying this is it, but we need to keep an eye on it. So, yeah, that's what I wanted to talk about. Let's keep an eye on this BKW Bank Index and see what happens going forward with the markets. So if you enjoyed this video, give me a thumbs up. Share it far and wide. If you haven't subscribed to my channel yet, please do. If you'd like to donate to my channel, there's some links below in the description. I'll talk to you later. Take care. Bye.